Good morning, good afternoon, good evening, and welcome to The Nest. It's October 1st, 2020, and we're streaming live with entrepreneurs and investors from around the world. I'm Jim Chu, and our goal here on The Nest is to connect entrepreneurs in emerging markets with angel investors worldwide. We stream live every Thursday, and all episodes are recorded and available on our website, findthenest.org. Today, we're featuring two companies from Nigeria, one providing financial services for the underserved, and the other making real estate transactions in emerging markets more efficient. We'll hear all about them both in a second, but before that, let me introduce our co-hosts for the week, Techpoint Africa and The Flip. Abisola and Justin, thanks for hosting The Nest with us. Abisola, would you like to kick it off?
Yes, please. Thank you so much. It's such a huge pleasure to be co-branding this episode of The Nest. We at Techpoint are really glad to be doing this. Yeah, about Techpoint. Techpoint is a media technological company, and what we do is to amplify the best innovations coming out of Africa, coming out of Nigeria, and how it can shape in the future. We do this through our publishing platforms. We try as much to make partnerships with media firms in Asia, some countries in Asia, also in Europe and the United States. And we also have another branch in East Africa. And we don't only do this through publishing platforms. We also host major tech conferences, and we try to shorten the gap between tech enthusiasts, curious minds, and also technology companies all over the world. So Thank you for having us.
Thank you for joining us. Justin, can you tell us a little bit about The Flip?
Yeah, sure. So my name is Justin Norman, and thanks again to the team at The Nest for having us back. We actually, together with Techpoint, co-hosted a few weeks ago, and I was really excited to hear that one of the two companies that pitched had actually had their round oversubscribed. So a very cool thing to be a part of, and hopefully we can tell the same story this week. But The Flip is a platform. It's probably most known at present as a media entity. It's a podcast and a newsletter that explores contextually relevant insights from entrepreneurs all across the continent, changing the status quo. It started out basically as a mechanism for me to learn. I'm this American guy living in South Africa, and I don't know anything. And it's, now been 2 full seasons of getting to speak to some of the top and most renowned venture-backed entrepreneurs and investors from around the continent. And Stephen Deng, who's an angel here, he was on an episode earlier this season, and one of his colleagues, Osaruman Osamuyi, also with DFS Lab, was just on an episode last week. So you can check us out at theflip.africa is our website, or at theflipafrica for social media.
And do you have broadcasts every week, or what's your frequency of?
So it's seasonal. So the show itself is heavily editorialized and edited. So it's not like just two tech bros chit-chatting. It's very editorialized. So we typically try to have an interdisciplinary set of entrepreneurs or investors or contributors speaking to the specific topic or theme that is each episode. And as a result, though, it's just a lot of work to do that editing process. So we actually just published the last episode of season 2 today, this morning, and then we're going to go on a brief hiatus. We'll still be publishing a weekly newsletter. I'll be writing a weekly essay every week, but for now we're gonna go on a little bit of a break before relaunching for season 3.
Gotcha. Well, looking forward to the relaunch. And thank you both, Abisola and Justin. Glad to be working with you both.
You're welcome.
All right. Well, next slide. Now moving on to the announcements. Can we go to thank you. So next week on October 8th, we'll be hosting The Nest in partnership with Techpoint, with startups, 2 startups from Africa. October 15th, we'll have another Nest Francophone session, which we had just yesterday as well, in partnership with Moban. And then the week after that, we will have, hold on here, we will have another session in partnership with the Nest on October 22nd. And then the week after that, on 29th, we will have Nestcast Live. If you're unable to join us last week for Nestcast Live, quick intro is that every month we do a session on the same time slot as the Nest, where we have an open dialogue about topics relevant to investing and entrepreneurship, especially in emerging markets. So we hear firsthand from investors and innovators, and we try to highlight some key issues that are relevant to all of us. Last week was about whether the venture capital model was right for Africa, and we hope to have other relevant topics going forward in the future. So join us. It's every week on Thursday at 9 a.m. San Francisco time, 5 p.m. Lagos time, and 7 p.m. Nairobi time. Great. Well, let's go on to the next slide. Thank you. For those of you in the audience who want to hear from you, this is an interactive forum. We've left it open on purpose for questions and comments. So in the chat box, make sure you ask questions, make comments. And in the meantime, please use it to introduce yourself, who you are, what you do, what country you're from, and what brought you to the Nest. All right, now over to the show. Let's introduce the angels. Aki, would you mind doing a quick intro?
Sure. So I work for a venture capital fund called Will that is based in Palo Alto, California. We invest in fintech, enterprise SaaS, and Industry 4.0. A unique thing about us is that we're being bridged between startups and corporations because we raise money from global companies that are based in Japan. I'm very excited to be here today because I know both companies are promoting financial inclusion, which is something I've been passionate about and have a bit of experience. So before VC, I helped fundraising for Kiva, a platform where people can lend money to low-income entrepreneurs around the world, especially in emerging markets. And after that, I worked for a microfinance institution in Sri Lanka and another fintech company providing small loans to SMEs in India. I think another relevant thing would be a blockchain company that was promoting financial inclusion through Trusted Lending Circle. It's a sort of group lending. That was based in Mountain View. So I'm very excited to be here. Thank you, Jim, again for this opportunity.
Great, a lot of relevant experience, it seems. Glad to have you here. Great, Stephen, over to you.
Yeah, thanks, Jim. It's great to be here. So my name is Stephen Deng. I am a partner at DFS Lab. We are an early stage investor and accelerator for what we're calling African commerce companies. Jim was right that we used to focus primarily on fintech, and we still do, but we've expanded that definition in the last year or so to include commerce companies more generally. In terms of background, can you hear me? It says my connection is unstable.
Yes, you sound fine.
In terms of my background, I'm also Bay Area based, but our firm is global. We have folks in Lagos, we have folks in Paris, and a large mentor network across the continent. I started my career in the telecom space with kind of smartphone tech and carrier work. Spent a couple of years at the Gates Foundation, and then started DFS Lab. So really curious about those topic areas, but really excited to hear from the entrepreneurs today.
Great. Sounds great. Welcome to the Nest. And I will see if Ibrahim's connection is working better now. Ibrahim, are you there?
Hi, everyone. My name is Ibrahim Sanya. I'm from Senegal. I work for an institution called Afrexim Bank. It's a development finance institution. My career is effectively a mix of private equity practitioner for about 15 years. And then I reconverted into investment banking, where I like to tell people I've retired into the job of connecting former colleagues with new entrepreneurs and new transaction and new project.
Great.
In my career, I've worked for Merrill Lynch, the IMF, AFC, the Africa Finance Corporation, and I love technology and telecom and a variety of sectors.
And I know you're
a big fan of Jim and what he does on the continent.
Thank you. And I know you're very, very active as an angel investors. How many angel investments have you made in the last few years? I'm curious.
I would say that number is still under 10, but it's growing fast. Over the last couple of years, there's been already something flirting with 10. So I would say that the selection is getting better. More is coming into the market, and I think post-COVID is going to be even more interesting.
Yes, I agree with you. I think we're really seeing a growth of the ecosystem now, and thanks to you, and hopefully the Nest can contribute to it as well. Hopefully we see a blossoming of startup investing and funding in the next few years. Well, great. Thank you all three of you for joining us today. And as you may have seen, there was a poll where everybody is from. We see a broad representation from Africa as expected, but also a number of people from North America and Europe as well. So welcome here, and even a couple of people from Asia. So welcome to you all. All right, well, now over to the entrepreneurs. Tomi and Daniel, you guys all ready?
Yes.
Okay, well, perfect. Before we get started, let's go over some of the rules really quickly. Each of you will have 5 minutes to present, and that is really 5 minutes. We will stop you after 5 minutes. So please keep your presentation short. We will have loads of time after your presentation for discussion with the angels and others from the crowd. So please respect the time so we can have a really good discussion. All right, so over to you, Tomi, with the first presentation.
Hello, everyone. My name is Tomi. I am the co-founder and the CEO of Bankly. This picture represents a typical informal market in Nigeria. Now, this sector accounts for over 70% of the nation's GDP. Yet, over 60 million of Nigerians, adult Nigerians, are excluded from the financial services. Now, to fill this gap, because the informal sector, let me tell you about a system of thrift collection known as the Ajo or Esusu. Now, this system is predominant in West Africa, and this system involves a thrift collector or an agent who goes about a community collecting daily savings ranging from about 30 cents to $1 from people who are at the market, at the commercial station, who typically makes money in cash and are unable, have no identity or unable to open a formal bank account. Now, this agent records this savings in a notebook. Now, this system typically works until it doesn't, because many times there have been cases where the thrift collector have collected savings from hundreds of people and then it defrauds them and it disappears. There's been cases where just life happens and he dies, and there's been no succession planning on how these people who have been saving consistently can access their cash savings. The second major issue or limitation of the thrift collection system is access. Because I need to have a direct interface with the agent to save, I then need to have a direct interface with the agent to retrieve my money. So what happens if I'm visiting another town and my mom is ill and I need my emergency fund? So access is greatly limited. Now, the third and most important one is data. Now, because customers lack a verifiable identity and cannot open a bank account, they are saving their every day with this thrift collector in cash, there is no insight to the data to build behavioral insights to be able to give them credit or insurance. So they are only exposed to loan sharks, they're exposed to predatory interest rates, and they're exposed, their business is at risk. Now, what did Bankly do? What Bankly did is that Bankly used technology to help people in this informal sector to protect and grow their income. And how did we do that? We took the concept of a thrift collector and converted his notebook into a wallet system, into a digital one using his phone. Now, the next thing we did was we helped the agent who already acts like a teller, like you have a teller in a bank, is able to help this informal market woman or a trader or a local commercial driver to register with their mobile phone. And now when they register with a phone number and then they have a wallet, they can continuously go to this agent, or the agent can go to them to save. Now they have the data on their phone to be able to first track their savings and to be able to view to be sure that their savings are safe. The second thing is they can go anywhere. They don't have to eyeball the agent to access their funds. They can get a card for their funds. They can pay or get their funds anywhere else. The second thing, we create a digital identity for them, because the agent is able to collect primary data from them and take a picture of them. It doesn't matter if they have any form of identity card or not. The third thing is the financial history, which is able to decide to give us insight for credit score and any other financial service. Now, the next thing, our revenue model is simple. We do asset management on the savings, and for the agents and the customers who perform other transactions like transfers, we're able to earn some transaction fees. A major differentiation factor is the fact that we are customer acquiring. There are a lot of agent networks in Africa and Nigeria, but these agent networks are focused on just transactions rather than acquiring the customers, because there's a difference between access, financial access, and financial inclusion. So we are focused on bringing the customers, letting them own and control their data. The second thing is that we become the gateway to data for the unbanked in Nigeria and in Africa worldwide. Now, in the last 12 plus months that we've grown, we've been able to build access points in over 12,000 locations, and we have 100% national coverage. We have over 30,000 customers, and we've been able to save or capture over $30 million in inflows. This ask, we've been getting cash investment of over 350,000, and the use of funds is for technology, talent, and regulatory infractions. And finally, I run out of time. Finally, I lead this team in partnership with Frederick and Ifeanyi. We all met while doing Axion Venture Lab, where Bankley was born. Thank you so much. Yeah.
Just right on time. Thank you very much, Tomi.
Yeah.
Great. Well, let's head over to the angels and hear your thoughts.
Yeah.
Who'd like to start?
I can start.
Please.
Yep. I saw the graph about competition, but can you tell me more about your digital competition? Because like you said, I know there are several companies providing similar agent network, and I think I've heard of Team Apt that has like relatively high market share in terms of transaction of like agent. So I'd like to know what makes you truly unique.
Okay, thank you for that, Aki. If you could see this consumer map, we broke it down into customer acquiring and non-customer acquiring. Now, you can be an agent network, and the agent are just able to perform transactions. So I go to the agent like a phone booth or like a call center, and I just perform the transaction and I walk away. Now, the customer is unknown to the operator. The customer's data is unknown. The agent is just performing, it's just transactional, nothing else. So you have no insight fully into what the customer is able to do, and they don't keep deposits. Now, what Bankley is different is that we built out an agent network to be able to onboard these customers so that they have a wallet by themselves. In a typical agent network, the agent only has a wallet, a smartphone, and an app. But we then have the customers, they don't need a smartphone. They can use a USSD. They don't need internet, and they can actually track their savings via their SMS. So we moved away from just agent network transactional. We moved to acquiring the customers' financial education, financial literacy, and then giving them a form of identity, because as they're transacting, they have credit history for other things, which is not possible with a typical agent network. I hope that helps.
How much do you pay agents?
The agent's fees depends on what the transaction is. So for instance, the uniqueness is that with us again is that the customers save on the platform. We hold deposits compared to other agent network. Now for agents who are paid, if they facilitate deposits, we can then incentivize them based on whatever percentage or a percentage of the deposit they bring in as a cost of customer acquisition. But when it comes to transfers, we charge them what a typical transfer, 25 naira, which is typical across board. It's not different from what a Paga would charge or an OP would charge. For withdrawals, if for some of our agents that have a POS terminal, which we did in partnership with InterSwitch, we charge them the same thing everyone, and the Nigerian interbank settlement system is charging. So it's different.
Thank you.
You're welcome.
I'll jump in here. Thanks for that presentation. It's great. We've seen people try to tackle this problem around the world, right? I think Sakos and Isusus have been around. My question is around customer acquisition, and I think that's been one of the biggest challenges for this model. Can you describe a little bit about how expensive it is in the beginning and how you've seen that change over time to acquire? I assume you're acquiring it through the groups themselves. And what makes you different about how you can actually acquire people and maintain them on the platform? Because I've seen this model break down in that way before, and I'm really curious. 30K is a pretty good customer base, so I'd love to hear more about that.
Okay, Stephen, thank you for that. First of all, 30K is actually just organic. We did no direct marketing. And what I want to share is the way this problem, a lot of times, Bankly my team and I with Axion, did a research for almost a year before we launched. So we have very primary research on understanding the customer. And what we found is that a lot of times people come and say, we want to include people, we want to build, and they go ahead and build a digital bank that has a smartphone that requires all your data or identity. Now, to bring people into the bank, and the only thing you're doing with a digital bank is cutting a slice of the existing banking pie. Now, if you're going to bring fresh 10 million people into the financial system, the first thing you need to do is build, if you're going to build a bank, the first thing you need to build bank branches. Now, because these people are more costly to serve and they have less you can't charge them as much as you can charge the top of the pyramid. You need to be able to serve them cheaply. And the first thing we then did is build the distribution, either directly or indirectly. Now, in building the distribution directly, we then deployed agents, making sure that we have presence in every single state in Nigeria and also presence in every local government, because it just seems like if you're going to use Bank of America, for instance, you need Bank of America in your state. If you're in Texas, you need Bank of America in Texas. So we then use this agents like bank branches. They are tellers, but it's then way cheaper and less overhead than building a bank branch. Now, the second phase, which has been the first phase, the whole of 2020 for Bankly. So what you see in 30,000 customers were actually organic growth, word of mouth, no direct marketing cost on that. Now, we built the footprint and the infrastructure and the distribution. The second thing we then did was we exposed our API to all other agent networks. And that's one of the specific difference. An agent network cannot work with me, but I have partnership. We're closing out on commercial partnership with 3 major agent networks that can move our 12,000 agents to 50,000 within the next 6 months. Now, once the agent network, the infrastructure is built, just like a telco, a mobile, and MTN would do when it came to Africa, the next thing that will happen is direct consumer marketing. Now, you then point them in the direction of those locations, because like I said, if a Bank of America launches in Houston, you see the brand, they then do some marketing to tell you we are present here. So the presence was the first thing. Then customer acquisition, which is where we're going to in 2021, which is why we need the money for the marketing to direct the customers to digitize cash at the agent location. So it's still going to be, right now, our cost of customer acquisition is really cheap, and it's still going to get better because the word of mouth is going to grow faster, because now the challenges with cash includes thefts. The challenges in cash includes not being able to get credits, and some of these challenges are being taken out, and the customers are seeing the value just within communities by themselves and coming into those locations to digitize cash.
So there's a related question from the audience from Raj Kulasingham. What is the month-to-month growth of customers, and when did you start customer acquisition? Thank you, Raj, for that question.
Yeah, thank you, Jim. So the month-to-month, I'm trying to see if I have this data, but the month-to-month growth has been over 100%, both for the distribution, which is the agent, and the customers. Now, remember, I mentioned that the first phase for Bankly was in building the distribution. like we're seeing financial services from the lenses of a fast-moving consumer good. Because the hypothesis we're trying to answer is, why would a cigarette company come to Nigeria and then you'll be able to buy their products everywhere in the core north where there's Boko Haram, but we don't find financial services there? Why would Budweiser come into Nigeria and within 12 months, the distribution is everywhere? Why can't we layer or build financial services to the last mile in the same way that fast-moving consumer goods are able to reach the last mile? And so what we found out is that we needed to build it through the distribution model. Now, in answering that question, we then first phase of banking was build the distribution or partner to build it. So the 12K agent is what we did. And next move is then the customer acquisition, which has been gradual. I would say it's just been 10% month on month for 2020, because that's not been our focus. But we expect now that we have branches that they can go and digitize cash, next month, by next year, it should significantly grow the same way our agent network grew, which was almost 60% month on month.
So it's interesting that during April and May, you saw some of the fastest growth. I wonder why that is. Why did we see such fast growth during the COVID period?
Oh, that's amazing. That's a great question. So during the COVID period, you would understand that a lot of bank branches were not open. Now, people still need access to funds. People still needed to make payments. People still needed to transfer money to their loved ones, domestic remittance. Now, what had happened is that the agent network that were live within your community became the fastest route to being able to do this, to perform these activities. Because an agent is like community banking. It's like in South Africa, they call them like Stockfell shops or something. Like they are small communities, so you don't have to travel a distance. Because when you leave Lagos or Abuja or the major cities, in fact, even in Lagos, when you leave the center of the city, the main urban area, the distance to a bank it can be really, really, really stressful or costly to go digitize cash. Now, for from a person who closes the shop or leaves the market, or a farmer who leaves the farm in the evening, the bank is even closed, even if you are close to it. So it becomes a challenge to then digitize cash. Or there's no incentive, there's no reason for me to leave my farm at 7 p.m. when the bank closes at 4 p.m. So the only option I have to digitize cash is through those agent networks who are always ready, and their location is very close to my house, or I build a relationship with them because their house is close to go perform those transactions. I hope that helps.
That's a very clear answer. Thank you. Yes. And Ibrahim is back. He dropped off for a second. Ibrahim, if you are there, do you have any questions you'd like to ask or comments you'd like to make?
I hope you can hear me. I've been struggling with
internet
here. All right, we need an angel here to save us from internet trouble the past week. But in a few questions, first, I'd be curious to know what gave you the idea to come up with this? Is it something that is linked to your past experience or a challenge you face yourself? That's my first question. The second is, I saw a great chart where you showed capital that you had raised so far, revenue level, amount of transaction. I'm curious to know precisely, maybe you put the chart back up, how much have you raised to date? How much was linked to equity? And thirdly, I'll be curious to understand what challenge do you see in order to scale this up? Because at the end of the day, I saw a revenue level of about, I think, $160,000, if I'm correct.
Yeah.
So how do we get to scale, right? Because basically you want to be generating some revenues that are at some point multiples to the dollars you're raising. So what is the effective change? You made a great presentation talking about how it impacts people, but how do you get that 100% coverage to translate in much more large volume of revenue?
All right, thank you so much, Brian, for those three questions. The first one was what gave me the idea. there were three scenarios or three things that led me to this journey, on this path. The first one was I started my career as an investment manager in a top tier investment banking firm in Nigeria called Meristem. And just after that, I left for my MBA in an Indian-based school called SPGen, which led me to Singapore, Sydney, and Dubai. Now, my first foray into fintech was in Sydney, where I was working with a peer-to-peer lending company. The second foray was why I was attached to a private equity firm in Singapore, where I had to research the full fintech space in Africa. And that includes Kenya, no, not Africa, Nigeria, Kenya, and South Africa, and recommend to the investment committee where I thought was opportunities for growth. Now, this gave me a full understanding of the space. Now, coming back into Nigeria, I co-founded a company, or I joined the founding team of a company called Aladdin, now known as Agromol. Aladdin was a partnership with Access Bank, one of the biggest retail banks in Nigeria, and Airtel Networks. Now, they both had a product called Access Money. Access Money was a mobile money wallet for the informal sector, but they had a challenge to being able to take it to market. Now, what Bankly did, what Smart Credit did, which was what I led, was to use the data of the telcos as a credit algorithm to determine, to be able to offer the unbanked loans. I'm talking $10, $50, what that roadside woman needs at the beginning of the day. Now, I then built, and I decided with my team to see if Nigerians just don't like to pay back, or there were obstructions in allowing them paying back. Like, what were the dependencies to getting people to pay back their loans, to be credit worthy? And so what I found was interesting, and I will use the word that it was easy to download money than it was to upload money. It's just the same way it's easy to download the whole series of Game of Thrones than it was for you to upload a 30 minutes video. And what that means was that I had calls with customers who would say, oh, I got a loan. I was able to pay for stuff on my phone. I was able to go to an ATM without the card and do a cardless withdrawal. But now I make money in cash and your money is with me in my pockets. It's right here. I don't know how to get it back into its digital form to pay you back. And the closest place to me, the closest agent to me is almost 10 miles away. Can you send someone to get it? So I realized that there were people the algorithm was right. We found the right people who were credit worthy, but we made it so easy for them to take the money, but made it difficult for them to digitize cash. Remember, in Africa today, even though we have, in Nigeria, let me speak Nigeria, even though we have about 40 million banked, 95% of transaction is still in cash. Even the banks withdraw money. So cash was a thing. And so even if they get money through a bank account, they withdraw to spend. And so that was the first scenario. The second scenario, with that in mind, I joined Axiom Venture Lab Company Builder Program, and then took time off to kind of research, to do primary research in this. And that was one of the most amazing things that helped me, because using the jobs to be done framework, I then went into this local market. I went into Abeokuta, I went into Kano. I then started having real user interviews to understand why has financial inclusion failed in Nigeria the same way. It has not taken off in the same way it's taken off in M-Pesa. Everybody has their postulations about it. What I did find out was that we needed to see it through the lenses of a fast-moving consumer good until you build the distribution the way the telcos built it. There were three phases to which the telcos penetrated Africa, and that mobile penetration has been successful worldwide. The first phase was they built an agent network. Ibrahim, I know you're an African, so you understand that every street you went to, you would see the umbrella guy. Now, most people didn't have a phone. All you do is you go to the agent to perform a transaction. They didn't stay there. And that's the phase financial services in Nigeria is right now. I did the primary research. I spent a year. We are building the agent network. That's just the infrastructure. Any company that doesn't move away from building the agent network to owning the customers will lose the market in 5-10 years. Now, they moved forward from then. People started buying Nokia phones. People started buying Motorola's and the Sagems. People started buying SIMs, but our money was still in cash. How did the telcos get their money? You go to the agent to buy a voucher. You load the voucher and it digitizes the cash instantly. They commoditize payment. You paid them and you started getting served. The third phase then became the new entrance of banks, the GTB and Axis Bank came, and then I don't need an agent to interact with my financial provider any longer. So to answer your question, what gave me the idea? Direct research, my former my former experience co-founding the team in fintech, and finally, some things I saw while doing my research and seeing how market women, culturally in the North, some people are not allowed. Women are not allowed to own a bank account, but the Adjust system is culturally acceptable. So you really can digitize them without the culture stopping them, really can bank them without the culture obstructing them. And then before they know it, before the men or the culture, the religious culture standing in the gap of where inclusion should happen, it has already happened. So capturing them through the Adjust system that is already culturally acceptable is what we believe. That's what gave me the idea. Sorry, I took so much time.
Thank you. That was a very thorough explanation.
Yeah, the second question was
the scale.
You know, let me say, how much have I raised till date? Technically, I've raised $300,000 in equity till date. From angels in Nigeria. Most of them are on my board, on my advisory board. They put their money where their mouth is. The third thing is, what challenge do I see to scale? The main challenge right now is in my ask is I'm building a banking infrastructure. We've done a phenomenal job with the team right now, but we need to prepare for scale. And preparing for scale, we need to make sure that we thoroughly put the system through anything that will prevent it to being able to accommodate scale. So we are upgrading to technology, improving the identification and fraud mitigation. So technology, people will be, if I don't build the right team, if I don't have a rock star management team, the right chief of operations, and this thing costs money, that would be one of the major things that will cost scale. I think, so those were the things where the regulation would have been a challenge, but one of the things we did is regulator might always be a challenge in a space like in Nigeria. The things we did is while we were building Bankly, we took the results to the CBN and said to them, these are the learnings we took from our proof of concept. And this is very much aligned with your 2025, the CBN's, the CBN governor's agenda. And please recommend to us what kind of licenses we need and how do you think we should scale? And so they themselves said, go for this license, and don't bother with partnerships any longer, go for your own license. And so we believe that we engage them early to bring them in the design process. And so that's regulation we anticipate, we never can tell, but we anticipate that will be very helpful. But marketing, right. I just need to get a fantastic marketing team because we're moving into consumer and retail marketing now in 2021.
Well, we're starting to run out of time, so I'd like to move it over to the angels again and get their feedback. Is this something you would invest in? You guys ready with your checkbooks today or tomorrow?
Do you mind if I start off?
Please, go ahead.
Yeah, thank you for the great presentation and great answers to our questions. I really love your mission and your personal story is very compelling. I think I will be more convinced. Okay, I see the uniqueness of your business, how you're different from others, but I will be more convinced if you can tell me why other players cannot do the same thing in the future. So yeah, that's from me, but still I really love your idea and looking forward to see the future traction.
And so are you planning to stay in touch or is this something that you're gonna, okay, great. Ibrahim, Stephen?
Yeah, I can go if you permit. So I think
go ahead, Ibrahim.
Thanks, Jim. So really effective presentation, well put together. It's clear that the level of passion you have for what you're doing is second to none. I read some testimony from one of your existing investors who put, I think, like 6 paragraphs on you on LinkedIn. So clearly, I understand where he comes from. So definitely of great interest. I would say, however, my recommendation is to really hone down on competition, because there's over 400 fintech companies at your current stage, and that's the number that's being tracked by some entity, and I'm sure they may not be counting you. So there's a plethora of these opportunities. I think it's critical to be able to sell the point of your uniqueness compared to the others. Bullet point 1. Bullet point 2, what are you doing to enable you to be merged into something that's existing and bigger? So what are you doing to enable smooth transition into a bigger platform or merge with another entity? Because at the end of the day, everybody you're speaking to is not for Facebook purposes. They're all investors, right? They want an exit. So they want to see your action to have some track towards an exit. And an exit is either you're listing on the stock exchange or you have a trade sale. So I think the path to trade sale is something we want to see. And third bullet point is really what are you doing effectively on your marketing, on your technology, on your operational front, where your revenue, it's growing much, much faster than the capital you're raising. Because the biggest issue in the fintech space continues to be that the valuations are multiples of your customers. But when you compare it to the revenues, to the deposit, it's still a big conundrum. So the faster you get to that acceleration mode in terms of your revenue compared to the money you raise, the more you will provide confidence that at some point there's some sizable dividends to be captured.
Okay, thank you for that, Ibrahim.
Thank you, Ibrahim. So, Stephen.
Yeah, very quickly, I agree mostly with what the other angels are saying. I would say that I feel you've done a great job of reducing our goal. You've really done your research. I really respect that AVL program. I do think that there are many layers of risk here that still exist. And so maybe one piece of advice I would have is to put some focus on how you reduce that risk, because they all kind of stack on top of each other, right? So you're trying to formalize an informal market. You have regulatory kind of open questions still going on, and you're going to have to put together a marketing program that works to explain all of those products and services that you're trying to put together, right? So if you could kind of sterilize that down into exactly what are people coming on board for. The growth is amazing, but what is driving that growth, and really put that into this, I think that would really help. So for now, I'm a pass on this, but I do think that there's clearly a lot of potential here.
Okay, and so what would convince you, Stephen? So aside from, let's say we do that, is this something that Tomi should be coming back to you on in the future?
Yeah, absolutely. So what would convince me is, I think, is quite simple, is if you can show me that piece of difference that is making the signups happen, and if that is sustained after the shifts from coronavirus have changed. Because like I said, with these models, my biggest worry as an investor from seeing this for the last 4 years is there's clearly a drop off after initial interest. And the churn rate per cohort grows over time. And if this is something that doesn't do that, that would make it pretty exceptional.
Great, very clear. And I think what I'm hearing a lot from everybody is there's a lot of competition out there. There needs to be a way to maintain that momentum and do it differently from many of the other fintechs that are out there. So great. Well, thank you very much, Tomi. And just to show that there's quite a bit of interest from the public as well. 75%, almost 75% of the public here has expressed interest to invest. And for those who are interested in investing, please let us know, and we will put everybody in touch. So get in touch with the Nest Crew team or myself, and we will get you in touch. Thank you very much for the presentation, and best of luck in raising this round.
Thank you, Jamie.
All right. Well, now we're over to Daniel. We're ready for you. Feel free to share your screen and get started whenever you're ready. Perfect.
Okay. You can see it?
Yes, we can.
Okay. Hi, my name is Daniel Block, and I'm the CEO of Seso Global. Seso is a one-stop platform for secure real estate management and transactions. We are building Africa's trusted property marketplace. Oh. So to give you a little bit of a high-level view, there's an echo. So give you maybe a high-level view on the company. Seso is currently active in Ghana, Nigeria, and South Africa. We have 65 property developers on the platform and over 7,000 properties. Since launching the product last year, we've generated approximately $190,000 in revenues and approaching 19,000 average monthly with growth each month. We're here on the Nest for finishing our bridge round of financing. We're raising $500,000 with the first $200,000 already committed. And this will be used to expand our diaspora sales team, increase our marketing spend, and hire additional software support. So buying property in Africa is, and especially in emerging economies, is costly and confusing. There's generally multiple different stakeholders you have to go through to complete your transaction. You'll need to check with the law firm, is the property legitimate? Is the seller the right person? Even if you find a property that's legitimate, the building could fall down and collapse, or you could have a building that does not have an approved building plan. So you might need an architect or surveyor. Even after you find your property to buy, you might have to consult with a bank or a valuer to make sure that that property is bankable. And if we look at the numbers, in 2018, remittances in Africa reached $45 billion a year, with 30% of that destined for real estate. So we can see that this lack of trust in the property market is a major opportunity for growth and investment. So the Seso platform is a web and phone application that simplifies the property purchasing process. So let me tell you a bit about how we do that. Seso is a digital real estate broker. We sell properties and property-related services. Our solution has brought together all of the stakeholders necessary in the real estate market to provide an end-to-end solution where a person can go from buying property, can connect with all the service providers necessary, like law firms, insurance, surveys, and valuers, and then close their transaction all the way to title registration. So let me show you how our go-to-market strategy works. We start first with property developers. We work with property developers who are currently managing their portfolios on paper and Excel and bring them onto the Seso CRM to manage their portfolios and their transactions. We then bring on land service providers, the lawyers, the surveyors, the valuers, the banks, who can be contacted during, before, or after the transaction to further provide those services. And then at the end, it goes to our marketplace where the buyer can verify and see these verified properties, contact the service providers necessary to conduct the transaction, and see it through to the very end of title registration on the platform. So as I said, Seso is a B2B2C solution. We start with our property developer CRM. We offer this solution to property developers, agents, and local governments. This solution allows you to manage your property documents, manage your property details and information on your portfolio, and then also manage your incoming leads, your team, set callbacks. So really a one-stop shop for the developer to manage their portfolios. Once they've done the verifications, we then bring it on to the Seso marketplace. On the marketplace, you can browse verified properties and conduct a transaction. You can connect with one of our partner mortgage banks in Ghana and Nigeria and access a mortgage. And as we discussed before, we can request a land service provider to do the legal work, the insurance, or the valuation during the process to make it a full end-to-end experience on the Seso platform. And this is the key of our revenue model here. We're a transactional based company. So we charge a transaction fee for each mortgage, property purchase, or service provider transaction that goes through the platform. So to take a little look at the network and the large players in the market, there's a few large-scale property marketplaces, and then on the other end, there's land registry companies. Naspers has Property 24 in 10 countries. Ringier has Rome, Africa. And then we have Thomson Reuters and Corby Tech with land registry solutions in many places. Seso is the only end-to-end process that brings these together, that provides one place where a person can find the verified properties and see it through to completion. So many of these competitors in the market, we see as potential exits into the future as we build out the Seso platform and show that this model is the way to scale. We have a great team behind us. I'm Daniel, as I said, I'm the CEO. My background is blockchain development and implementation. I've been working on solutions for 10 years. Philip, our CEO and co-founder, experience at UBS on the wealth management desk for Africa. Eugene, our head of engineering, has experience in building fintech solutions. And Kwaku comes from a background of VC and private equity. We have an excellent advisory team as well behind us with experience in banking, property, and law that helps us reach this scale and continue to grow the company. So thank you very much, and that's a bit about Seso.
Great, thank you very much for being right on time. Thank you very much. All right, over to the angels for feedback.
I can ask the first question. Thanks, Daniel, for the presentation. I got to admit, not an area that I know too much about, but one that I think is clearly growing. So my question is broader, and hopefully other ones can dive deeper, but my question is about TAM for this. So I always worry when we're looking at stuff that the comparators they have a lot of Western counterparts to them in the deck, because the fundamental consumer market for real estate is very different, right, as you know. So can you give me a better sense of how you think about your addressable market, and especially once you saturated, let's say, the top 0.0001% that you're probably currently at, what does that look like after that?
Yeah, definitely. So we look at this again. This is a B2B2C solution. So our first clients are the developers. So again, we look at large-scale developers right now who are, again, looking to digitize from their paper methods into a platform. So we kind of call Seso the Amazon model, where we have a marketplace, but our real clients are then the users that are providing the resources into the marketplace. So we start with the property developers. The next solution, as I said, that's why we have the CRM solution. We're now onboarding agents and further than brokers who can then expand into the market. And then we want to go on to individual houses. We have a pilot in Khayelitsha in Cape Town right now, which is on the lowest income of properties, government RDP houses. And we've had 1,000 people register their properties with Seso, and have been able to register in the last 3 months, 300 of those into title, which generally takes 12 months. So we see the solution growing. So it starts with property developers at the top, it goes to the agents, and then eventually goes to individual homeowners who want to access this digital registry solution and be able to enter their properties into a verified marketplace.
Thank you.
So Ibrahim here. Oh, go ahead.
Please.
Ladies first.
Thank you. So if I understand correctly, by the way, thank you for the compelling presentations. I really like the idea. I have a question about your business model. If I understand correctly, you have multiple business flows. One is property management CRM, and property marketplace, and mortgage marketplace, and also the registration service for potentially government. So I would like to know where you think the greatest value is in the business you're building. Is it controlling and owning the registry system, or becoming a marketplace, or providing CRM?
Yeah, great question. Thank you very much. So there's two solutions. So the B2B2C. So the marketplace is all encompassing. So you can find the properties on the same marketplace. You can find the banks, because that's part of the transaction. And then you can find the service providers. The issues that we see is that buying a property is not a one-step process. You need each of these stakeholders to complete the transaction. So the marketplace is really, those services are just really to enable the marketplace to act. And when we look at then the CRM comes to the fact that most marketplaces do not verify their properties. If I go to most property marketplaces, I don't know. Oh, sorry, can you hear me?
Yeah, keep going.
Hello? Can you hear me?
Yes, go ahead, keep going.
Oh, sorry, I thought you couldn't hear me. Okay, great. So then the B2B solution is most marketplaces do not have verified property. So this is a way to get the developers onto the platform, manage their documents so we know they're legitimate, and then to come onto the marketplace. The real solution is the CRM. This is what's scalable and this is what grows. So we kind of think about it as the Amazon model. We have the marketplace to start with that creates attraction, that creates transactions. And then the people who list on our marketplace are our key clients that we sell our solutions to.
Thank you.
Any other comments, questions? Ibrahim?
Yes, Jim, thanks. So great presentation. Definitely, disruptive. So I had a couple of questions. One set about path to profitability. I don't know if I missed that, but was wondering when does it plan to be cash generative, and what is your steady state and burn rate? So that's one family of questions. And the second question is, what's your current raise size and pre-valuation estimate in your view? And have you already got some partial amount committed? Those are the two sets of questions.
Yeah. Okay, great. Thanks, Ibrahim. So we expect on this track to be profitable by summer 2021. We're making great progress these past few months. We've signed our biggest CRM licensing deal for $50,000 for a 6-month pilot here in South Africa. And we're growing month by month, increasing sales. So we have, especially now with flights opening up, we market heavily to diaspora. So we have like these last few months have been really, intense. So people calling into the company, starting to plan their times back. We converted from kind of physical events to virtual tours, virtual open houses, webinars, which we've seen a fantastic traction. We've closed several deals from buyers in the UK without ever stepping foot in Nigeria, which is a great sign in seeing the transition in the market. So we currently burn approximately $25,000 per month. On average, for each sale that we make, Seso brings in $5,000 of transactional revenues. We recently closed an apartment in Ikoyi for $650,000. So that brought in $25,000 of revenue. So it's a very cash friendly business. So as we get the scale going with sales, we expect profitability by next year. And one of the key focuses that we have a permanent sales office led by our COO, Philip, in London. So we're the only company that has a permanent diaspora sales office in London, able to meet clients, able to make relationships, and we're seeing huge dividends pay off in recent sales from that office. When it comes to the raise right now, we're raising a bridge round to our Series A, $500,000. We have $200,000 already closed in the bank from our first close at the end of March, led by Keffel Africa Ventures and one of our past angels, Jamie Broderick, the former CEO of UBS UK. So we're looking to close the last 300,000. And really, as I said, what that's going to do is be able to scale our marketing team, bring more people, especially in the diaspora, and get more sales. And with the CRM, we expect that by next year being approximately looking at 8 markets, because we don't even personally need to be there to launch the platform. Again, all we need is developers that we offer then the CRM, we bring on the service providers, and then we launch it into the market.
Great. Thanks for the clear answer. Any other questions or comments from either the audience or the angels? Aki?
Yeah, I understand that house shortage is a serious problem in Nigeria and in South Africa and other African countries, partly because the land ownership is not clear. That's why I see a huge value in your business, especially in this land registry system. But my question would be, how do you convince these landowners to register their land or house, given that they don't want to pay ownership fee?
Yeah, that's a great question. So it's all about creating incentives. Everything in life comes with, incentives. So work with developers is, like you said, we work with people with clear title, with a financial incentive to sell the properties efficiently because they have many properties and they don't want to look like a scam on one of them. So right now we work with developers who have the clear title, and then we can do the secondary transfer through our conveyancing partners. And that's the first step. And why are they on the platform? Because of the marketplace. That's why we launched the marketplace. That is the incentive to get people on to sell. The next step is around creating financial assets in order to get people to list. So I'll give a couple examples. We just launched our first diaspora mortgage product where you can take a mortgage in the UK at 5.5% to buy in Nigeria. It's the first product of such kind. And so when we look at the developers that want to list, in order to be access to this new mortgage product, you have to done full due diligence on your own documents. You have to get a conveyancer, you have to get a valuer. So it's not that they want to pay to do this. They want to enter this market and they're willing to pay in order to get that. Just a quick one on the low end of the market. We have a pilot in Khayelitsha, which is a township outside of Cape Town. We have 1,000 properties on the platform, and this is in the lowest income of users. So people say, why would they, want to pay, for this land registration. So what you see is that there's different reasons. And one of the main reasons right now is that the government built these houses 30 years ago. So now a lot of the next of kin are taking over the houses. So the next of kin want to sell the houses. They maybe want to get a home loan, or they might want to use it as an asset for something else, but they cannot because it hasn't been properly registered. So what we build is a platform and a portal that shows you how to upload your properties and then what you will get, what transactions you can do to get that. So if I want to sell my property through Seso in Khayelitsha, I have to have the proper documentations. But if I don't have them, I can hire the service providers on the marketplace in order to get that documentation to list. So, I always say that, if you don't look at it as land registration, every land registration project ends up in failure, all these World Bank projects, because at the end of the day, the people know what's really the government's after. They're after taxes. They want, they knock on doors, who lives here? And people say, we don't know who lives here, because they know it's a tax ploy. But if the government said, this is a mortgage-backed guarantee loan, and if you register your documents efficiently, you will get this low-interest loan. And I will guarantee that there will be people queuing up to come and register their land documents because it's a real financial asset, at the end of it. So it's about creating the incentive model. Right now, we're focusing on the property developers because it's at scale, and we have this pilot in the low-income areas, but it's about then, creating the incentives for each level.
Jim, I have one question.
Yes, Raj, please.
Declare my interest. I'm an advisor and a shareholder in Seso, but I have one question which I think I'd like Daniel to explain a little bit, which is what happens to someone, because one of the biggest problems that which fascinated me about what they were trying to do was actually giving someone a title, because I think that's what Seso started doing, saying the biggest challenge in Africa is that people don't have a piece of paper that tells you what title is. And I think it'd be useful, Daniel, if you could explain what someone who goes through the process gets at the end of it and how that's a more marketable property as a result of having gone through the process than if you hadn't gone through the process.
100%. So, again, there's a million examples of, issues with, having title. And whenever we market, many people who approach us have experiences of buying property and it's not there, or it's not the property that they were expecting in that end. And so the main issues, again, with not having title is that, one, you cannot pass it on to your next of kin. So you lose out on that family value, and there's often, land fights, over property, over the verifications, on that end. Additionally, it's less value to sell the land without a title. The actual value of the property goes down. And then, as mortgages are becoming an aspect, you're unable to access, the financing and have that ability. So what we look at is then providing people the route. We are not trying to replace the land registry. We think of ourselves as the pre-land registry, the staging portal that allows people to go from us into the government, seamlessly. And the importance of that is that people always think the titling is the last step, is the first step. You go to the government and just get your title. In reality, you have to prove you own the land. So it comes up with a ton of documentation. You need the architect's report. You need the past sale report. You might need like the seller's siblings to sign off and say that they don't want a part of the will. So there's a lot of documentation that needs to be done before you can register. And what Seso is doing is creating that pathway from the developers, from the homeowners, to show what you need and how you can get it. And the key part, I wanted to mention as well, is that each of these transactions to the land service providers are also done via Ethereum smart contracts. So right now, if I go to the government, they don't hold valuations, they don't hold title searches, they don't hold building plans. These are all private sector documentations that are needed as the pre-registry to go into the government's registry. So what we're trying to do is build a seamless route, build the trust on the blockchain, and as Ross said, actually build value through allowing people the seamless way of registration. But more important, the registration is the start and the means to a transaction, to an access, to capital. Has to be clear.
Great. Well, thank you for that, Daniel. Tijan Watt, a venture capitalist from West Africa, also has a question about inflation and currency, I believe. Yes. Tijan?
Yeah, thank you so much for the presentation. I'm really interested in the macro situation in Nigeria. I was a private equity investor in Nigeria for a couple of years. This was in 2007, we experienced a 50% devaluation from one day to the next. It does, the key thing that I heard in your presentation was that you would get loans from a UK bank and at low interest rates, and then lend them to the buyers, which seems to be kind of a carry trade, where you can kind of get the low interest rates abroad and invest in a higher yielding market. The challenge is when the currency loses value, that could affect the cash flows of, let's say if it's a rental unit, an apartment or something that's bringing in rent, that could potentially affect the cash flows of that asset. And so I guess the question is really, why have you chosen Nigeria and Ghana, which are, do experience double-digit inflation and have, significant currency volatility, as opposed to a market with more stable kind of currency situation? And finally, if the UK banks are doing well for some reason, would the Nigerian banking sector kind of intervene and kind of try to block, that whole transaction?
Yeah. Thanks to John. Yeah, great question. So two things to kind of unpack there. So one aspect is why Nigeria, why Ghana? And we say simply it's because of the opportunity. You look at Nigeria, 18 million housing deficit is the number often that's used, similar figures by proportion in Ghana. And so we want to come in kind of that reason, because people are not there, and that because there is this opportunity to invest in and to really scale up the developers. And that's really helped us onboard developers, because they see the value Seso is bringing the diaspora, bringing in our, kind of the new model as well. So we've seen a lot of onboarding in that way. And the currency is you could say, almost a double-edged sword. So yes, we'll talk about the lending in 1 second, but when the currency depreciates in Nigeria, what you often see is a huge inflow of investment from the diaspora. So in that case, if you're buying cash, say without a mortgage, in this past devaluation, you're getting a 30% discount. Additionally, many of our developers, through Seso, they have, will set up bank accounts in the UK, accept UK transfers for the property, and have that set up as well. So what we see is that when Naira is strong, you're going to see, or when Naira is weak, you're going to see more investment from the diaspora getting that opportunity. And then, as, the Naira strengthens as well, again, there's an emotional connection many diaspora have. There's the housing shortage in general locally, so you'll still have this active market. So I think in the devaluation as well, we've actually seen bigger interest, especially from the diaspora, over the past few months with the currency changes. When it comes to the diaspora mortgage, this is a new product. It's being tested out. Again, I will say there's no issues with the government regulations in the sense that these are being run by the Nigerian banks in the UK. FCMB UK is set up the first product. There's Access Bank UK, Zenith Bank UK. We're very well in touch with CBA in New York. So most Nigerian banks have already set up these offices abroad for the the expansion to capture this diaspora opportunity. But at the end of the day, of course, that's the risk you're going to have to take. If you're going to take a mortgage, you need to evaluate the risk. Many people are buying not for investment, maybe for a family member. Many people, majority of people we have is for a holiday home. So this is the first step. What I would say to you is that this is the first mortgage product. We shouldn't look at the negatives. We should be positive that a diaspora mortgage product has launched, and we're working on several others with our insurance partner, Braithwaite's. And this is only the beginning. So there will be in creative products. So you as a private equity gentleman, I invite you to come up, work with us with the model to more easily, invest and grab capital, to bring into property in Nigeria and Ghana.
Thank you for that thorough answer. So we put up a poll. Please, love to hear your votes on whether you invest. And while we do that, over to the angels. What's your thought on this? Something you'll invest in? Next steps.
Can I go?
Yes, please, Ibrahim.
All right. So I thought that it was a strong presentation. I think the opportunity is there. I would actually reinforce the answer of the entrepreneur vis-a-vis Tijan Watt, the last question. So Tijan is also a good friend. But I think the one thing to capture here is the opportunity is very much vaster in the Anglophone market, where you have inefficiency in the currency, where you take in the Francophone market, the inefficiencies are already quite exploited. And the markets are just much larger. I think only Ivory Coast could stack to compare to a Ghana or a Nigeria. So I think if there's anything to look at in terms of scaling outside of Nigeria, it'd be probably East Africa. But I definitely, I'm a convinced guy, so I would invest.
Great. So you're going to take over the rest of the round? You're going to lead a round? What's the right step for you?
I have a rule that I never invest more than my good brother Raj in any transaction.
Raj, you're already in. So, okay.
I'll tell you later how much I invested, Ibrahim.
Aki, Stephen, thoughts?
Sure. It's fascinating idea, but difficult to execute. I'm not saying it's bad just because it's difficult, because once you build it, it's good because other people can't build it. But I think I see some challenges here. One part of your business is marketplace, and building marketplace effectively is already very difficult. We have invested in several marketplace businesses, and one actually became unicorn. It's a Japanese company. But one of the challenges of marketplace is the space is kind of winner takes the most. So you have to act very quickly to be one of the dominant players. So the execution matters a lot. And now I see you have CRM and several marketplaces. And I understand that it sounded that you need these marketplaces to enable your software solution, which actually makes me a little bit nervous about the execution speed. And another point is that marketplace needs relatively high volume to break even. So I would be curious how you structure your business models in that sense. And one more point, actually, I didn't have time to ask, is about legal validity. I would like to know how legal disputes over the ownership registered in the blockchain are being resolved currently. But that being said, I still really like your idea. I think it's very compelling because it's solving real problem for multiple stakeholders in the country. So it might take some time, but once you build it, you'll be a really dominant player in the market. So I would like to keep in touch and see more tractions in the future.
So what would convince you, Aki?
I would like to see more focus on the business structure. And how can you enable your software solution without spending lots of money on marketplace?
Gotcha. No, thank you for that. Thank you for your feedback. Stephen?
Yeah, thanks, Daniel. That was a great presentation. I'm actually pretty compelled by this diaspora mortgage product. I think it's a double-edged sword for me, right? I think it underlines the fact that the diaspora cash flows are so important right now to the mortgage market that it is the first product that you went after. But it's also a sense to me that you understand where you need to get started, which is good. I think this is something that I would want to look more into. I have a personal policy of not just putting in capital and only putting it into companies where I can actually, move the needle along. And it's going to be a harder one for me since I'm such a fintech focused investor. But I do find it pretty compelling that you are also trying to get at the root cause and using smart contracts to figure some of this out. Although that's a whole nother can of worms that we can get to later. But yeah, I'd love to follow this along. It's not a conviction on day one type of thing for me because there's kind of diligence for myself and for the business a bit more. But I'd love to follow along as you build.
Great. Thank you very much, Stephen, for the feedback. So,
Jim,
yes,
I have a question.
Yes.
Both for the whole team, not only the Seso team, but even the investors such as Raj. So what is the envisioned path of exit in terms of trade sale? Like the same concern with Bankly earlier. Like obviously it's a marketplace, it's not the fintech, etc. But even on the fintech space, you have many options that can come about. In this marketplace, there's not going to be too many similar action. So who are you reversing into? Is it going to be a developer? Which player in the mortgage space is likely to want to integrate this, according to your thoughts?
Yeah, great question. So I think it's very simple. There's definitely, we already have started approaching different companies on the line. So there's Naspers, who are already in contact with. Naspers owns Prop24, which is a major property marketplace. There's Ringier in Germany that owns Rome Africa, many marketplaces around Africa as well. But as we said, the concept why we built this is because we know the concept of the marketplace does not work in Africa for property. With these additional issues of verifying the property, getting the trust, needing the extra providers, you cannot win with a marketplace. And so most of these companies like the Naspers, the Ringiers are just burning cash with minimum returns. So I think they'll see the Seso model as we grow and, beat them out in these markets. Additionally are the land registry companies. So we're in close contact with Terranet. You should look at Terranet. They're the company that has digitized the Ontario land registry. The founder, Aris Kaplanis, is one of our informal advisors. They did a trade sale for $3.2 billion and are now looking internationally as well. You have Thomson Reuters, who actually is a big player in the land registry space, Aumentum. And then there's EDM Group, which you look at from Dubai, which owns many of the marketplaces across the world in many emerging markets. So we look at these marketplaces that will see the value of the trade acquisition being less than trying to enter our markets. And then the potential registry companies or a JLL or a CBRE who sees it as an access in their, kind of this growing prop tech sector. And just to note, prop tech is one of the fastest growing industries in tech. I know there's a big focus on fintech, but prop tech hasn't even touched, Africa at all yet. So, when we see the amount of money going to prop tech across the world, it's only a matter of time that, the industry sees that Africa is the place for prop tech. A huge barrier, for the amount of houses that are required are massive. There's barriers to entry, so people be looking at people who have the stakeholders already on. And so we see Seso being an easy acquisition as people want to enter this market.
Okay. If I invest, one of my first suggestions will be that you orient your choice towards a JLL or a CBRE than a Nasper-like, because all the first set of parties you listed will try to pay you down mostly in shares versus cash, while a JLL or a CBRE would want to integrate you in order to generate more business. So you'll get a valuation premium there that you'll never get from one of the first one you listed.
Point. Yeah.
The other point I was going to make.
And I'm actually.
Okay. Go ahead.
I was just going to say exactly. We're speaking to the Broll family as well. I thought I'd mention that. And so I do agree that these people who are more traditional in the real estate markets will see us as their transition, into the digital aspect here.
Okay, great. The other point I was going to say was to take into consideration the point of my good friend Tijan Watt. So not necessarily only stable, but definitely look at there's some low-hanging fruit. I mean, every Pan-African play tends to look at South Africa, Nigeria, and Ghana first. And we don't look at Kenya and East African places, but there is a lot of stability there in terms of movement of wealth and of capital, whether from the Indian diaspora that's between Dubai and Kenya, that is from the Kenyan diaspora that's everywhere. There's a lot happening there, and there's actually more stable return in terms of, if you look at the PE 20 years, if you look at VC 20 years, if you look at 10-year, the stability is stronger there than on the West Africa side. I'm from West Africa, so this is a fully objective point.
Yeah.
Thank you for that.
That makes sense.
Very insightful.
Yeah, appreciate that.
First of all, the quick note on the poll from the public, and we see over 60% of the public indicating interest in investing in your company, Daniel. So congratulations. I think you convinced many in the public. And overall, I wish you the best of luck. I think it's a very, very interesting proposition. And I guess one of my questions would be, why are you raising so little? To Aki's point, this is a winner-takes-all market. So perhaps we could be going more aggressive on this raise. Anyway, obviously, you have your own decisions, but that would be one of the questions that I would like to ask after the session and we dig a little bit further. But regardless, congratulations on a great presentation and great feedback, and we'll definitely put everybody together for additional conversation after this. Well, thank you very much, everybody, for attending this week's Nest. Just want to remind you to come back next week, October 8th. We'll have another session for Nigerian companies, and it will be at the same time, same link, same everything. So look forward to having everybody on the show next week. Goodbye, everybody. Look forward to seeing you again.
Bye.
Thank you.
Thank you, Aki. Thank you, Ibrahim.
Yes.
Novi. Glad you could join. Hopefully we can have you back again on another session focused on West Africa.
It'll be a pleasure, Jim. Thanks for joining us.
Thank you, Laura, for riding the train. Thank you, Jim. And remember, don't forget to subscribe to our YouTube channel, and we also have an RSS podcast feed of this show as well as Nestcast Live. And your feedback on companies, on how we think we can do things better, as well as future topics for Nestcast Live are always welcome. Thanks, everybody. See you next week.
All right, bye.
Bye-bye.